How do you see the competitive landscape in renewable fuels? There's been a lot of consolidation in the space, but there's also a lot of interesting new technologies, right? I mean, I'm sure you're following Global Clean Energy Holdings.
Sure.
Those guys are trying to develop a new feedstock, and I think EPA just certified it, and then they are repurposing a refinery not too far in the same state, and trying to develop renewable fuels, diesel essentially, and Exxon's picked up offtake of that.
Just kind of depends on the technology and your risk tolerance, right? Nobody really wants to build serial number one or something. And in a lot of these things, it takes a long time to go through all your different testing and scaling up. And scaling up is the biggest concern here. But for Rodeo, it's pretty straightforward. The feed pretreatment's a bit different for us, right? I mean, we have some of that on the crude oil side as well, so the concept's there, but the technology is a little bit new. Once you get past that, this is standard hydrocracking, hydrotreating, right? We're used to that. It's just different exotherms and different ways you have to operate. But that all feels very comfortable. The challenge is the technology. We see the same thing on carbon capture, which is it cryo, is it amine, and different people claim different things there. Batteries is a different challenge because these car manufacturers, they have these very long, drawn-out 3, 5, 6-year processes to get your material approved to go into the battery. So those are some of the challenges that we're finding. But to your question about the competition, a lot of folks are looking to do the same thing, right? We're an industry of copycats. So you're going to see a lot of people trying to repurpose different assets. And so I think we'll see that. And so we're trying to figure out what makes us unique. And where do we think we have strengths that we can leverage that are different than our competition, and also be careful about not overbuilding into that kind of a market. So Rodeo is a great project, but you're probably not going to hear us talk a lot more about other that size full conversions in the U.S. Because I think we've got better places to spend our money.
Okay. What about LCFS credits, right? The general, our modeling is not too different from the general consensus, but it's going down as more projects come on stream.
It's actually it's up $5 or $6 last week. I think it's back up to 68. It's certainly a concern. Our premise when we approved the project was way higher than that number.
Right.
But if you look at it, it's really interesting. And I had one of my analysts put this together because the executives kept, getting kind of sweaty palms on it. And so they said, well, we think some of it's offset by the RIN. And so he plotted a graph, just as like a stacked area graph, and he included the credits, the BTC, the RIN, the LCFS, right? All different, and you could see it, things move. I said, now make all of the different areas the same color, so you can't tell which is which. It's practically a straight line, right? If you like 30-day rolling average. And so it's showing up, it's just showing up in a different bucket. It's more in the RIN right now.
Okay.
To incent it. At the end of the day, the producer needs so much, you kind of don't care which bucket it's in. Now, to some degree, if you own another refinery in California that's traditional, you do care, because the LCFS is an obligation for you there too, right? And where do you want it? So we think that the market's pretty sophisticated, and so we spend a lot of time on that, making sure we understand where those incentives are coming from. It's certainly a big trading house we've got that's making sure that they're positioning us well, hedging and making sure that we've got what we need to not just cover our existing business, but maximizes the value of the renewables we're producing.
So that's an insightful comment. I want to make sure I understand this. What you're saying is that if you are seeing LCFS credits go down, that is because there is not substantive demand for those credits from obligated parties, and therefore, their RIN obligations are responding accordingly, and therefore net, if you're an integrated player, you're probably, your cost obligation hasn't really changed.
Yeah, well, but the producer of a gallon of renewable diesel, they get the RIN, assuming you can get it all the way, to the end user. So you get the RIN and you get the LCFS. Do you care which one is which, as long as they add up to the same?
Right.
So that's just from the producer perspective.
Yeah.
Right. And so,
but that works. That math works only if you're an integrated player that owns that has an obligation as well.
No, that's a different. It's a different perspective for the obligated guy. So a brand new company comes out. You start your new company, and you build a grassroots renewable diesel facility. Right. When you produce that, you're going to sell it. You'll get the value of the product. Right. For a gallon of diesel, you'll get the. And if assuming you can keep the credits, if you can capture the credits, you'll get the LCFS. You can sell that, or you can get the RIN.
That's interesting. Okay.
Right. So your economics, so we're just looking at the project economics. And so we overestimated what the LCFS would be today, but we underestimated what the RIN would be.
Value.
So the project earnings still look pretty good. And now, we're looking now at Rodeo. I think once the full project starts up, it'll be in max SAF operation mode from day one. You can turn some knobs, run it a bit harder. So 50,000 barrels a day, 20% of that may come out as SAF.
At what price do you think?
I say SAF, it'll come out as renewable jet. Most people, those two terms aren't exactly interchangeable. You have to take the renewable jet, blend it no more than 50% into a fossil jet batch. That then becomes SAF.
And SAF is at what premium to jet fuel, roughly?
It's not a transparent market. I know what we're getting from British Airways that I can't share at the UK, but we think that, we've met with some airlines and they've we get it. We've made these 10% commitments we've got to get to. They put themselves on the hook for it, self-inflicted, and they're like, we just don't, the green premium. We don't want it to be 3 times the price of Jet A. I'm like, that's not going to be an issue. But
I tried Maria. Well, I have an analyst who's chasing SAF pricing every day of the
It's
week.
hard. It is very opaque in that market because there's just not much. It's so thinly traded. We actually believe that SAF is not going to trade relative to Jet A premium to Jet A, and that's how people talk about it. It's going to trade as a premium to renewable diesel. Because that's your option, is you have to incent them to make the SAF instead of renewable diesel. And then you have co-products. So you run the plant a little higher severity, you crack a little bit more, you can make your jet fuel, renewable jet, but you also make naphtha. Well, that's renewable naphtha. That's pretty crappy quality as far as blending it into gasoline typically, but the chemicals guys we think are going to love it because now it's a renewable feedstock for their crackers. All right, and so how do those co-product prices move around? And the yields, you'll make more fuel gas as well, so your yields will shift a bit. You'll burn up your catalyst a little faster, and so you have to decide how much more do you need to justify running at that higher severity to make the SAF. Now, the other people that'll make SAF from other ways, just straight alcohol to jet, they'll just likely ride that wave unless that capacity gets built up so high that it now becomes a dominant volume.
Is there any proprietary technology that, Phillips has a great R&D center that has some amazing alumni coming out of it. I'm just, but like, what is the?
You still miss working? You miss working there still?
I miss the people at Phillips 66 more than anybody else. But do you? So we know that take SAF for example, right? I think a lot of the technology development, the first wave of plants, all came out of early stage companies, right? And then of course, Neste and some of these guys have kind of co-opted in and added a lot of capacity as the sector has grown. But there's still room for a lot of technology development and all of that stuff. So I'm curious, is Bartlesville working on this? What's happening from a process technology point of view in R&D at Phillips 66?
Yeah, we are doing a lot. Honestly, the biggest value that I get in my job today is I can call my buddy Allo in Bartlesville and say, hey, I just got this on my desk. There's a SIM for a new investment. Does this make any sense at all? Right? And the team's probably been through 200 SIMs in the last year. And so being able to weed that quickly is valuable. Our strength really isn't bringing brand new products to market. It's more about optimizing what we've got. Certainly we have a lot of technology internal for our base business. FCC, from legacy Conoco days to Conoco Phillips down to Phillips, coking technology, especially premium coking technology, was all born there, right? And in fact, our needle coke that goes into the battery anode market, and it also goes into the steel market for electric arc furnaces. I heard the head of that group kind of describe it as, in the market, we're kind of considered the WTI of specialty coke. Everyone else sets their price off ours based on the quality relative to what we make. And so we're going to continue to work on that side of it. But as we look to alcohol to jet, we do enough work in our lab, our guys are there enough to understand it, that we can sort through pretty quick and figure out whose technology is the one that we think we want to focus on. Because we do get some pretty crazy ideas that people bring to us of how they can have the latest renewable energy source. So you'll see us work there a bit, but I don't think you'll see us trying to get out to license a bunch and create a licensing group right now.
Yeah.
But you never know what you're going to find. So never say never.